Welcome back, my friends. There have been ongoing developments in the cryptocurrency market. So I am updating you more often on this subject because it is a rapidly changing situation. Coinbase is now cutting a fifth of its workforce following an 18% layoff in June. CEO Brian Armstrong pointed to recent pressure on the crypto sector thanks to unscrupulous actors have brought pressure on the crypto industry, said Coinbase CEO Brian Armstrong. Of course, he was referring to bankrupt exchange FTX and its founder, Sam Bankman-Fried. The FTX collapse and the resulting contagion has created a black eye for the industry, Armstrong said. And there's likely more shoes to drop, Armstrong continued. As you probably know if you follow this channel, cryptocurrency exchange FTX filed for bankruptcy in November. And the fallout from the FTX bankruptcy has sent shockwaves through the cryptocurrency world. One of the few remaining cryptocurrency exchange companies is Coinbase. Although it is still operating, Coinbase did not have a good 2022. In fact, it has laid off hundreds of employees. And the FTX bankruptcy is casting a shadow of doubt over the entire cryptocurrency world. Coinbase is now caught up in the contagion. And so is the leading cryptocurrency, Bitcoin. Shares in Coinbase continue to fall as the Bitcoin slide continues. Wall Street investors are fearing contagion from FTX collapse. The crash in cryptocurrency prices shows no signs of slowing. But, where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And, what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Coinbase is cutting about a fifth of its workforce, as it looks to preserve cash during the crypto market downturn. The exchange plans to cut 950 jobs, according to a blog post published Tuesday morning. Coinbase, which had roughly 4,700 employees as of the end of September, already slashed 18% of its workforce in June, citing a need to manage costs and growing too quickly during the bull market. With perfect hindsight, looking back, we should have done more, CEO Brian Armstrong told CNBC in a phone interview. The best you can do is react quickly once information becomes available, and that's what we're doing in this case. Coinbase said the move would result in new expenses of between $149 million and $163 million for the first quarter. The layoffs, along with other restructuring measures, will bring Coinbase's operating expenses down by 25% for the quarter ending in March, according to a new regulatory filing. The crypto company also said it expects adjusted EBITDA losses for the full year to be within a prior $500 million guardrail set last year. After looking at various stress tests for Coinbase's annual revenue, Armstrong said, it became clear that we would need to reduce expenses to increase our chances of doing well in every scenario. And there was no way to do so without reducing headcount. The company will also be shutting down several projects with a lower probability of success. Cryptocurrency markets have been rocked in recent months following the collapse of one of the industry's biggest players, FTX. Unscrupulous actors put pressure on the industry, said Armstrong, referring to FTX and its founder, Sam Bankman-Fried. The FTX collapse and the resulting contagion has created a black eye for the industry, he said. Adding there's likely more shoes to drop. We may not have seen the last of it. There will be increased scrutiny on various companies in the space to make sure that they're following the rules, Armstrong said. Long term, that's a good thing. But short term, there's still a lot of market fear. Cryptocurrencies have suffered alongside technology stocks, as investors flee riskier assets amid a broader economic downturn. Bitcoin is down 58% in the past year, while Coinbase shares are off by more than 83%. Coinbase joins a chorus of other tech companies cutting jobs after going on a hiring binge during the COVID pandemic. Last week, Amazon said it would cut 18,000 jobs, while Salesforce reduced its headcount by more than 7,000, or 10%. Elon Musk slashed about half of Twitter's workforce after taking the helm as CEO last year. And Meta cut more than 11,000 jobs, or 13%. Every company in Silicon Valley felt like we were just focused on growth, Armstrong said. And people were almost using their headcount number as a symbol of how much progress they were making, Armstrong continued. The focus now is on operational efficiency, said Armstrong. It is a healthy thing for the ecosystem and the industry to focus more on those things, Armstrong also noted. Early last year, Coinbase had said it planned to add 2,000 jobs across product, engineering and design. Armstrong said he's now trying to shift the culture at Coinbase to get back to its startup roots of smaller teams that can move quickly. Coinbase went public in April 2021 and has seen its share price plummet since. The stock is trading below $40 after surging as high as $429.54 on the day of its debut. Coinbase debt that's maturing in 2031 continues to trade at roughly 50 cents on the dollar. The company still had cash and equivalents of roughly $5 billion as of the end of September. Coinbase said it would email affected employees on their personal accounts and revoke access to company systems. Armstrong acknowledged the latter feels sudden and harsh, but it's the only prudent choice given our responsibility to protect customer information. Armstrong was steadfast in arguing that the industry isn't going away. He said the demise of FTX would ultimately benefit Coinbase, as its largest competitor is now wiped out. Regulatory clarity may also emerge, and Armstrong said it validates the company's decision of building and going public in the US. The CEO likened the current environment to the dot-com boom and bust. If you look at the internet era, the best companies got even stronger by having rigorous cost management, he said. That's what's going to happen here. Shares in Coinbase have lost over a quarter of their value in the past month. The FTX collapse is affecting everything in the cryptocurrency world. Coinbase does not have any material exposure to FTX, said Coinbase CEO Brian Armstrong. But I have sympathy for everyone involved, Armstrong continued. Coinbase shares are now at their lowest point since Coinbase went public in April 2021. The value of Bitcoin also continues to fall. Investors are clearly worried about contagion from FTX's stunning collapse last week. It's stressful any time there is potential for customer loss in our industry, and a lot of people are losing a lot of money as a result of FTX's struggles, Coinbase CEO Brian Armstrong said. Bank of America analysts downgraded Coinbase shares on Friday, saying, there is contagion risk for the cryptocurrency exchange platform, even if it is not another FTX. That does not make them immune from the broader fallout within the crypto ecosystem, wrote Bank of America's Jason Kupferberg. Prior to FTX's bankruptcy, the market was in the midst of a crypto winter. Bitcoin and Ethereum were falling in value and had forced a number of crypto companies into bankruptcy. In its Q3 earnings call, Coinbase reported a revenue plunge of more than 50% in Q3 as compared to Q3 of last year. Coinbase also reported a loss of $545 million in Q3 alone. Back in June, Coinbase cut 18% of its employees. Wall Street reacted with a violent sell-off. There are many cryptocurrency collapses ahead. It looks like the sudden failure of FTX and its sister hedge fund Alameda Research are causing a domino effect of failures. Many trading firms will be wiped out and shut down. Many other companies that have assets tied to FTX are now seeking to raise funds on an emergency basis. But, as I am sure you know by now, not everyone believes in the future of cryptocurrency. Most notably, New York University professor Nouriel Roubini. Crypto and some of its major players as an ecosystem that is totally corrupt, said economist Nouriel Roubini. There were 7 C's of crypto: concealed, corrupt, crooks, criminals, con men, carnival barkers, and finally, Binance chief executive Changpeng Zhao, known as CZ. The lesson of the last few weeks is these people should be out of here, Roubini added. Binance CEO Changpeng Zhao declined to comment in response. Recent turbulence in the crypto market has resulted from highly risky crypto investments. That also includes unsustainable borrowing and lending by crypto companies and related investment funds. Bitcoin is consistently trading below $17,000 for the first time since 2020. Many experts are fearing that the contagion could spread to topple other major players. CEO Changpeng Zhao is banned in the United Kingdom. He is under investigation by U.S. Justice Department for money laundering, said Roubini. The regulators should be thinking carefully, he said. Dubai, the commercial capital of the United Arab Emirates, granted the crypto exchange its green light earlier in the year. The United Arab Emirates has implemented a number of reforms and frameworks to become a crypto hub. In this way, the UAE seems to be tacking opposite to other countries and governments as they ring the bell and sound the alarm over the industry's risks. The cryptocurrency industry has ballooned in size over the past few years. Changpeng Zhao has led Binance to getting regulatory approval in both Dubai and Abu Dhabi. And Binance has also won regulatory approval in France, its first major European jurisdiction. Bitcoin sunk to just under $16,000 for the first time in recent memory. If you recall, Bitcoin peaked at an all-time high of $68,982.20 1 year ago. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. But what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.